In just 7 days, AI stocks lost $800 billion in value. NVIDIA hit $5 trillion and then crashed 9%. Goldman Sachs is predicting a 20% market crash. Michael Burry, the guy who predicted the 2008 crisis, is now betting against AI stocks. Is this the dot-com bubble all over again, or is this time actually different? What I found will shock you. Hey everyone, welcome to the World Finance. This is the most important finance story of November 2025, and it's happening right now as I'm recording this. This video took days to research because the situation is changing by the hour. So smash that like button and subscribe, because by the end of this video, you'll understand whether we're about to see the biggest market crash since 2008. Let's start with the craziest part. In November 2025, NVIDIA became the first company ever to hit a $5 trillion valuation. That's trillion with a T. To put this in perspective, NVIDIA alone now represents 8% of the entire S&P 500 index. Think about that. One company, 8% of America's 500 biggest companies combined. NVIDIA makes the chips that power AI, the graphics processing units that run ChatGPT, Google's AI, everything. As AI exploded, so did NVIDIA's stock. From 2023 to now, it's been an absolute rocket ship. But here's where it gets crazy. In the first week of November, AI stocks lost over $800 billion in market value. NVIDIA dropped 9.1% in a single week. But it wasn't just NVIDIA. The Magnificent Seven, NVIDIA, Amazon, Apple, Microsoft, Tesla, Google, and Meta, all recorded massive one-day falls in early November. The Nasdaq Composite had its steepest weekly decline since April. Bitcoin dropped below $100,000. Tech stocks got absolutely hammered. Investors started asking the same question: are we in a bubble? Here's why people are panicking. Companies like Palantir are trading at 700 times earnings. That means at current profit levels, it would take 700 years to recoup your investment. Let that sink in. 700 years. Or look at OpenAI, the company behind ChatGPT. In the first half of 2025, they made $4.3 billion in revenue. Impressive, right? But they lost $13.5 billion. That's a loss-to-revenue ratio of 314%. They're losing $3 for every dollar they make. And it's not just random analysts saying this. Goldman Sachs CEO David Solomon warned this week of a likely 10 to 20% drawdown in equity markets within the next 2 years. The International Monetary Fund and the Bank of England have both sounded alarm bells. Morgan Stanley's CEO echoed the same concerns. These are the biggest names in finance, and they're all saying the same thing: brace for impact. Then came the bombshell. Michael Burry, yes, the Michael Burry who predicted the 2008 housing crash, has taken short positions against both Palantir and NVIDIA. For those who don't know, shorting means he's betting these stocks will fall. He makes money if they crash. This is the guy who was right about 2008, when everyone thought he was crazy. Now he's saying AI stocks are overvalued, and it gets worse. SoftBank, one of the biggest tech investors in the world, sold their entire stake in NVIDIA. They lost almost $50 billion in a single week on their AI investments. Everyone's making the same comparison: the dot-com bubble. In the late 1990s, internet stocks soared to insane valuations. Companies with zero profits were worth billions. Then it all collapsed. The Nasdaq fell 80%. Look at these charts. The similarities are eerie. The euphoria, the speculation, the disconnect between valuations and actual profits. But here's the trillion-dollar question. Is this time different? To figure that out, we need to look at the other side of the story. First, let's talk about real profits. Unlike the dot-com era, where most companies had no path to profitability, today's AI giants are printing money. NVIDIA isn't just hype. Their revenue for the last quarter was over $80 billion, with a net profit of $40 billion. That's a 50% profit margin. It's not just a story, it's a cash-generating machine. Even with the recent drop, the stock is still up massively for the year. This isn't pets.com. This is fundamental business growth. Second, the picks and shovels argument. During the gold rush, the people who got rich weren't the gold miners, but the ones selling them the picks and shovels. Today, NVIDIA is selling the picks and shovels for the AI revolution. Every major company in the world, from Ford to Pfizer, is racing to integrate AI into their business. And to do that, they all need one thing: NVIDIA's chips. The demand is not speculative, it's structural. We're talking about a fundamental replatforming of the entire global economy. Third, what about the other Magnificent Seven? Microsoft is a perfect example. They're not just an AI company, they're a diversified tech giant. Their investment in OpenAI is paying off massively. Azure cloud services are booming. Office 365 is a subscription monster, and their gaming division is a powerhouse. The AI component is just one part of a much bigger, stable, and profitable enterprise. Even with market pullbacks, these companies have solid fundamentals and diverse revenue streams that most dot-com companies could only dream of. But let's be real, there are serious risks. The biggest one is competition. NVIDIA has dominated the AI chip market, but everyone wants a piece of that pie. Google, Amazon, and even Apple are developing their own custom AI chips to reduce their reliance on NVIDIA. If they succeed, NVIDIA's insane profit margins could shrink. And then there's the macroeconomic picture. Interest rates are still a major factor. If they remain high, it makes borrowing money more expensive, which can slow down investment and growth across the board, hitting tech stocks the hardest. So, what should you do? Let me be crystal clear. This is not financial advice. But here's how I'm thinking about it. Are we in a bubble? Probably not a full-blown .com 2.0 bubble, but more of a mini bubble or a hype cycle peak. The valuations of some AI companies are disconnected from reality. A correction was inevitable and, frankly, healthy. It shakes out the weak hands and the pure speculators. But is AI a fad? Absolutely not. This is a technological shift as significant as the internet or the smartphone. So, should you buy the dip? It depends on your timeline and risk tolerance. If you're a long-term investor who believes in the AI revolution, periods of panic like this can be opportunities to buy great companies at a discount. But if you're looking for a quick buck, be careful. The volatility is insane, and trying to time the market is a fool's game. My strategy is to focus on quality. I'm looking at the established giants with real profits and a clear path to AI integration, not the speculative startups with 700 times PE ratios. Think diversification, think long-term, and don't panic sell. This story is just getting started. This has been one of the wildest weeks in finance, and the dust is far from settled. What do you think? Are we heading for a crash, or is this just a bump in the road for the AI revolution? Is this time actually different? Here's what the optimists say. Unlike the dot-com era, today's AI leaders like Microsoft and Google are massively profitable. They're not startups burning cash, they're established giants with real revenue. In 2001, when the dot-com bubble burst, tech companies saw their profits drop 65%. But today, Wall Street expects these AI companies to grow earnings by 17% next year. That's a huge difference. Second argument, AI is being used right now. OpenAI's revenue is running at $13 billion per year. Anthropic is targeting $9 billion in 2025. These aren't theoretical. Millions of people use AI every single day. In the dot-com era, people were investing in websites that had 0 visitors. Today, ChatGPT has hundreds of millions of users. Google's AI processes billions of searches. This is real usage, not speculation. But here's the bear case. Ray Dalio, one of the world's most successful investors, says current AI investment is very similar to the dot-com bubble. Even Sam Altman, the CEO of OpenAI, admits an AI bubble is ongoing and that investors are overexcited. Think about that. The guy running the biggest AI company is saying there's a bubble. The problems are real. AI requires massive computing power and energy. The costs are astronomical. Implementation is difficult. And there's a huge shortage of AI talent. Here's what really scares me. The Magnificent Seven now make up 35% of the S&P $500 is total value. That means more than 1/3 of the entire U.S. stock market is concentrated in just 7 companies. If NVIDIA alone represents 8% of the S&P 500, any major correction in that single stock could trigger massive ripple effects across the entire market. This level of concentration is unprecedented. It's incredibly dangerous. So what do experts actually predict? Federal Reserve Chair Jerome Powell says AI companies are generating significant revenue, suggesting this isn't pure speculation. Goldman Sachs research identifies early-stage bubble characteristics, but says leading firms have strong fundamentals. The consensus? A 10 to 20% market correction is likely within the next 12 to 24 months, what they call a healthy reset to cool down valuations. But a full bubble burst? That depends on whether profits can catch up to expectations. So who survives if this bubble pops? Companies with strong balance sheets, competitive advantages, and actual profits will weather the storm. Microsoft, Google, Amazon, they'll probably be fine. But pure-play AI companies with no profits, they're in serious danger. Companies like Palantir with those 700 times valuations, they could lose 70 to 80% of their value. The market will shift from hype to fundamentals, from speculation to profitability, from growth at any cost to sustainable business models. So here's the bottom line. We're at a critical turning point. AI stocks have lost $800 billion in a week. Major investors are betting against them. Wall Street CEOs are warning of corrections. Is this the dot-com bubble 2.0? Maybe. But unlike 2000, these companies actually make money and have real users. My prediction? We'll see a correction, probably 10 to 20%, but not a total collapse. The companies with real business models will survive. The speculation plays will get crushed. The key is this. The long-term promise of AI is real, but short-term valuations have gotten way ahead of reality. A reset is coming. What do you think? Are we in a bubble? Let me know in the comments. And if this video helped you understand what's happening right now in the markets, smash that like button and subscribe for more breaking finance news. This story is still unfolding. I'll keep you updated. Remember, the best investors stay informed, stay rational, and never follow the hype. See you in the next video.